Okay, we're back on the record. The session's back in, at 11:40. Okay, Ms. Case, you ready?
Yes, thank you, I am. Again, for the record, Phyllis Sims, the law firm of Keen Miller representing Cantium. So for our next witness, we'd like to call Miss April Harris. Ms. Harris, I know you've been here before, most recently last week, but please reintroduce yourself to the commission members.
Yes, good morning. My name is April Harris, Tax Director for Cantium.
And describe your educational background for the commission.
I'm a Louisiana CPA. I have an undergrad in accounting from Southeastern Louisiana University. I have a Master of Tax from University of New Orleans.
And how long have you been employed as the tax director for Cantium?
6 years, over 6 years. I was hired at Cantium in August of 2017.
And give us a brief description of your work background.
Well, my history of my career is I have over 30 years experience in taxation and specifically the energy sector, and that's for privately held and publicly held corporations. I worked for Dominion Resources and Entergy, or both SEC publicly traded corporations, and Anchor Energy, all prior to joining Cantium.
I'm going to direct your attention once again to Exhibit 3A. And I know that this has been discussed in detail last week and today, so this will be brief. We just want to
Ms. Sims, was that 3A?
3A is an apple.
Okay.
And Ms. Harris, you were responsible for filing the 2022 LAP forms with Lafourche Parish, correct?
Yes,
And you timely submitted the LAP forms for the 2022 tax year, correct?
yes.
And which LAP forms did you use to file for the property that's in dispute here today?
Well, for assessment number 310-332-7904, I used a LAT 5 form for the oil and gas surface equipment, and I used LAT 12 for the oil and gas subsurface.
And Commissioner Bircher had previously asked some questions about the differences in the wells 2020, 2021, and 2022. Can you give us a comparison of those wells between the two tax years, last year, well, the last 3 years?
Okay, I'll begin with the 22 tax return. We had a total well number of 232. And as that compares to 21, we had 230, and I mean in 2020 we had 229. So that is a well increase of 3 for the three years. And for the 2022, sorry, tax return, of the 232 wells, sorry, 0 was producing as of the beginning of the year for 22, and that's a big difference between the prior 2 years. There was 0 producing due to Hurricane Ida, and this is per Sunrus. The Sunrus database that's maintained by the Louisiana Department of Natural Resources. So I extracted the statuses for these wells from Sunrus, and that's the result, is that there was none producing as of the beginning of the year. And so of the 232 wells, the breakdown for these 232 non-producing status was 97 was temporarily abandoned and 115 was shut in. And a large amount of the 115 was shut in due to Hurricane Ida. And if you compare this to our reserve report, you would see that we have 21 producing wells as of January 1. And then my report shows no producing wells. So the difference is Sunrus has about a 3 to 4 month lag in the reporting and updating of the statuses. So the reserve report is based on actual production, real-time actual production. And I knew, okay, so reporting on this, on the return, I put the status per Sunrus, which is according to the rules and regulation. But I knew that we, because of Ida, we were bringing a large majority of those wells back online during 22. So for tax reporting purposes, those wells that were shut in for Hurricane Ida were treated just as they were producing. And so just kind of information, after Ida, it took 7 to 8 months to get back up to Cantim's average daily production in the state. But I treated those wells as if they would have been assessed under the tables as if they were producing.
I know that was a lot of information, so I'm going to break it down just for a moment. So for the commission members, contrast and compare the number of temporarily abandoned wells from 2020, 2021, and 2022.
Okay, yes. For 2020, we had 88 temporarily abandoned wells. For 21, we had 90. And for 2022, we had 97 temporarily abandoned wells.
And then I'm going to add.
Okay. First year, 2020, 88. Second year, 21, 90. 22, 97.
And within your LAT filing, I'm going to turn to that page now. It's in Exhibit 3A. Let me get the Bates numbers. We're going to look at pages 44 through 48. You have those 44 through 48. Okay. All right, and so let's look at, I want you to give us a rundown of the status column. And in the status column, you will see that unlike the past 2 years, there are no wells that have a status listed as active producing, correct?
Correct. And again, that is per the Sunrus database.
So again, summarize why there are no wells listed as active producing and the majority are listed as shut in, aside from the 97 temporarily abandoned wells.
Well, the shut in was due to Hurricane Ida. So we had, out of the 115, a large percentage of those was shut in still due to Hurricane Ida per the Sunrus.
And last year, the commission had some questions on some of the details in this, in this report about the reserve report column and the asset retirement obligation column. And if you look over, you will see those two columns. So we're going to run through some of the examples to show where it appears some information may be confusing or missing, but it is not. And so I'm going to first direct the commission members to page 45. What number is that up there? Mm-hmm.
1, 2, 3, 8, 5, and 9.
Page 46. No, not that. So on page 46, about half the way down, there is number 133,859, and right above it, there is number.
Yes, if you look at,
Which
this-
page are we on?
We are on, Mr. Eddington, we are on Bates page number 46, about middle of the page. And we're going to give the commission members just a moment to find well serial number, the far left corner, far left column. The two well serial numbers are 133612 and 133859. And that is Commissioner Widow's page 46 on the bottom right. Okay, in the middle of the page, 133612, 133859. Now, if we look over a couple of columns, Ms. Harris, please tell us what the well numbers are associated with those wells.
the API number, the state API number.
No, the well number. There's a
Oh,
column that says
I'm
well
sorry.
number.
Okay, that is well number 32 and 32D.
And explain for the commission what the D means.
Yes, the D means is that it was it's a dual purpose, single well bore. Meaning, it is, a single well bore with the, opportunity, potential to produce at multiple reservoirs.
So if then we look over a little bit further for the column for the reserve report information, the reserve report information amounts exactly the same. And why is that?
Yes, I presented it as I elected to put the total reserve value split between the two wells. The two, they share the same API number. So I presented it that way. It's the total is correct. I just split it between the two sibling wells.
And the column right beside that, the asset retirement obligation, one of the wells doesn't have anything. The other well has $193,000. Explain that.
So, so we have one, there's one cost, 193,000 associated with these two siblings. Since they're in one well bore, there's only one, you're only going to be charged. You don't have a separate, abandonment cost for each, sibling well, since it's one well bore. So I put the abandonment cost on the well that was temporarily abandoned versus the one that was shut in with future production.
And by this testimony, we are trying to address some of the questions that were asked last year, some of the details, and it was just a bit confusing. And so again, Ms. Harris, there is no information missing in the input of these values, correct?
Correct.
And we're not going to belabor this point on any more, but there are multiple cases like this where there are the dual purpose single well bores. We just wanted to point that out in case that the commission has any questions about that. Ms. Harris, I'm going to go back to the first page of Exhibit 3A, which is again this May 23rd letter. And again, this has been discussed in detail, so I'm not going to go through it too much. But can you summarize in the first paragraph of the letter what the request was to the assessor's office from Cantium?
Yes, an opportunity to discuss the valuation approaches, the three different approaches that we provided information for in this return package.
And again, did the assessor's office take you up on your request to discuss the valuation?
No,
And then turn to the last page of your cover letter, which is Bates number 30. And again, can you summarize the last paragraph? I know it's been read already, but can you just summarize it for us?
we welcome further discussion and dialogue to discuss the valuation approaches and wanting to provide any additional information needed.
And did the assessor's office have any questions regarding the submitted information?
No,
And did the assessor's office request any additional information?
no,
Mr. Eddington had asked a question about audited financials. Did anyone in the assessor's office request audited financials from Cantium?
no, neither the assessor or Deputy Assessor Ms. Swift. Neither one requested any audit and financials from me.
Next, I'm going to turn your attention to Exhibit 15A, which is page 941, the document, and that would be in your second book. Ms. Harris, can you identify what this document is just for the commission?
It's a summary of our communication, my communication with the assessor's office regarding the 2022 tax year.
And you recall the 2021 tax year hearing was on what date?
Our 2021 hearing was on November 10th, 2022.
And I know that Mr. Polozola has already addressed it with Assessor Thibodeau. But once again, after the hearing on November 10th, 2022, you emailed the assessor's office, correct?
Yes.
And that is on page 948 of the document. And what date was that email?
That was on November 25th, 2022. I emailed Assessor Thibodeau. Would you like me to walk through it?
Just describe, what was the purpose of that email?
Okay. After we had our 2021 hearing with this commission, I emailed Ms. Thibodeau to follow up to see if there was anything else we could provide. Because in the 2021 hearing, it was mentioned that it would have been helpful if they had a full audit report for the state leases. And so I emailed her in an effort to see if she wanted that for the 22 tax year or anything else.
And the assessor responded a few days later, correct?
Yes,
And that response is on page 949, which is again already been addressed by Mr. Polozola. And did the assessor in that email request any additional information?
no,
The information you provided supported a couple of different evaluations for the property. And I know Mr. Beers provided thorough testimony, but could you just remind the commission of the fair market values requested for the property?
yes. So in Cantium's view, the fair market value of the property is 29,748,928. And that's according to, that's prepared under the sales method. It's prepared according to the sales method, but refreshed the purchase price by adding the cumulative additions since the acquisition. And that is that is 14 million. So we took the allocated purchase price plus the cumulative asset additions since the acquisition for another 14 million added to that to arrive at 29 million. And that is the blue box on the blue bar on the graph over here. And to be consistent with the commission's rulings from 2020 and 2021, I took this commission's methodology and added the to refresh the sale price number, added the 14 million of tangible additions since the acquisition. That's a 29 million in the box below. And then according to this commission's previous rulings, I added back the abandonment liability. And that is 25 million. So that gets you to a total of 54,958,927. And that's in the red box, the last box on the graph. And for comparative purposes, and since the income method was introduced for the ruling passed in 2020 for the income method, the discounted cash flow method, we've included the 62,693,199, and that is based on the income method using our extract from the Ryder Scott Reserve Report. And that's in the green bar on the graph.
And I have no further questions for Ms. Harris.
Commissioners,
Mr. Eddington?
Ms. Harris, Brian Eddington, Counsel for the Lafourche Parish Assessor's Office. First, you were here a few months ago when Ms. Alexander testified, were you not?
This is Caitlin's first time to testify.
A few months ago?
No, a few moments ago.
Oh, I thought he said months too. Sorry, that's what I heard too.
I asked her if the Ryder Scott audited report was provided to the assessor, and she said that she didn't know. And I've looked at the documents, I don't see it. Can you tell me, was the full Ryder Scott audited report provided to Assessor Thibodeau or the Lafourche Parish Assessor's Office?
No, it was not.
Okay. You seem to be still anchoring your valuation on the June 30th, 2017 sale. Is that a fair summary?
Yes,
Okay, so sale took place on June 30th, 2017. Well, let's talk about every year since then, the 5.5 years that have lapsed since then. In 2018, when you filed, and I assume based upon your prior testimony that you filed the returns, the renditions for Cantium in 2018. As I understand it, you reported the value based solely upon the replacement cost method, the tables provided the tax commission the rules and regulations, correct?
Correct.
And can you explain why?
Um, mainly followed the rules and regulations. For the tables without any in-depth research and knowledge. I followed the tables.
And that's how the assessor valued Cantium's property for 2018, correct?
Correct.
And you didn't advise Assessor Thibodeau of the sale in 2018, did you?
No, I wasn't aware of the tax law in the matter until sometime later.
Yeah, I think you testified you discovered the regulation in the fall of 2019, correct?
I don't recall the date.
Well, that was your prior testimony, yeah, some years ago. Or are you suggesting that that testimony was incorrect, or you just don't recall now?
I just don't recall now.
Okay, so you don't have any criticism, any critique of Assessor Thibodeau's valuation of Cantium's property for 18, do you?
Well, now researching the law, I would say it was incorrect. But there's nothing I can do about that year.
Now, why do you believe her 18 assessment was incorrect?
Because the law allows consideration of the fair market value as determined through an arm's length transaction by a willing buyer and willing seller, knowledgeable on both ends. So Cantium, in my view, Cantium should have received an evaluation of about 15 million for the 2018 rendition.
And so how would Assessor Thibodeau have come up with that value in 2018?
She would not have been able to without any additional information from me, Cantium.
Okay, so you would agree without that information, Assessor Thibodeau could not in 2018 have valued this property based upon the sales price, correct?
Correct.
2019, once again, when you filed returns for Cantium, you did them based purely on the tables promulgated in Chapter 9 of the Tax Commission Rules and Regulations, correct?
Correct.
And just the same reason as you just testified for 2018, correct?
Correct.
Okay, that was year 2. Year 3, that's your 2020. When you file the returns, you once again filed returns listing the values based on the Chapter 9 tables promulgated by the Tax Commission, correct?
Correct. I prepared it according to the tables. But in addition, I supplied supplemental information to support the sales method.
Okay, now you say you provided supplemental information, and that would be exhibit 3C1, correct?
Um, 3C1 is the first package of information, but then there was an additional information after that.
Okay, now be clear, the additional information was after you had filed, after Cantium had filed its appeal for 2020, correct?
I'm not sure of the timing
Well,
of
the
when
record-
the appeal was filed, and when the additional, I mean, this did provide the assessor, this did alert her of the sale and provided the conveyance of record for the asset and acquisition. And also in number 1 on this letter, I say that the asset purchase and sale agreement is not provided. However, it is available for your review upon your request.
Okay, so again, you didn't provide it to her, correct?
Correct.
Okay. Now, just a moment ago, you testified that there's no way Assessor Thibodeau for 2018, and you said the same for 2019, could have assessed the property based upon the sales price without the sales documents, and you didn't provide them to her, correct? For 2020.
I asked if she would need anything else, and if she wanted to discuss it. I put it in several different ways.
Okay, well-
Without just coming short of going to her office and unannounced, uninvited, and presenting it to her.
Why didn't you do that?
I mean, out of respect for the assessor,
Well, again,
if she wanted the information, she could have emailed or called, responded to this letter.
well, again, in 2020, we did have the problem that for the first time, I guess we discussed last week, you sent an email out on Thursday, September the 10th, acknowledging that I understand Assessor Thibodeau was out of the office for a family emergency. On the 11th, you submitted this letter that said that the conveyance records for 2017 asset acquisition of related assets due to physical volume and sensitive nature, non-disclosure agreements in a sale, in effect between the seller and buyer, a full asset purchase sale agreement is not provided herewith. However, it is available for your review upon request. I mean, when you say you offered it to her, that's what you're referencing, correct?
Our CFO, Richard Kirkland, hand delivered this package to the assessor's office. We did realize the assessor had a family emergency, but was hoping to catch the deputy assessor, Ms. Swift, in the office to discuss and go over. Richard Kirkland did have a copy of the asset and purchase sale agreement with him at that time on September 11th.
Well, I see you left a lot of other documents. Why didn't you leave a copy of the actual sale document?
Mr. Eddington, if I may, I mean, this was covered in 2 hours of testimony last week.
I'm gonna be brief, but y'all open the door when you're talking about what was provided for prior years.
I'll allow the question.
Yep. Well, it was a confidential document, and with Chevron.
Okay, but there were, you provided other confidential documents. In fact, you say they're confidential. We consider the information contained herewith to be confidential and not for public disclosure pursuant to LARS 472327. What was different about the sale document?
The sale docket from, again, I'm not an attorney, but the sale document needed, we needed specific permission from Chevron to release that to another party. I believe there is a document that was included in the purchase and sale agreement as a statement of confidentiality.
And did you request that clearance from Chevron?
We did.
And what did they say?
We received an affidavit from a Mr. Ritter that eventually said that we could share it with this commission.
But you didn't share it with Assessor Thibodeau?
It was shared with Ms. Thibodeau through the exhibits to the 2020 hearing and the 21
Okay.
hearing via her attorney. And we've also had numerous emails where I've asked, do you need any additional information? And specifically, do you need a copy? Do you want a copy of the purchase and sale agreement, as in this letter dated September 11th? says that it's confidential in nature, but we could provide it upon your request.
Okay. In 2021, year 4, when you filed your returns, you did this time reference the sale, correct? And that is, I believe, exhibit 3B. I'm sorry, 3A. And I look at this and you, this would be exhibit 3. I'm sorry, I'm getting a loose track of them. No, 3A is the wrong year. 3BI, I'm sorry. This is your 2021 return. You once again say that the assignment and bill of sale by Cantium, line between Chevron USA, assignor and Cantium, are recorded in the clerk's office. But again, that document doesn't disclose the sales price, correct? And if you go to the page 2, you once again say, due to the physical volume and sensitive nature, non-disclosure agreements in effect between the seller and buyer, a full asset purchase and sale agreement, APSA, is not provided herewith. However, it is available for your review upon request. Is that what it says?
No, sir. On Cantium's exhibit 3BI, on the letter dated September 3rd, 2021 for this was regarding the 2021 tax year. On note number 1, paragraph number 1 on that statement, I've enclosed a preliminary settlement statement, and that does include the purchase price.
That wasn't my
Okay.
question. I was simply asking you, does your letter say, due to the physical volume and sensitive nature, non-disclosure agreements in effect between the seller and buyer, a full asset purchase and sale agreement is not provided herewith. However, it is available for your review upon request. Does it say that?
Are you on the first? Can you reference? Your
Page
section?
66, exhibit 3B1, a letter dated September 3rd, 2021, top of page 2.
Okay, I'm there. Yes, that is what it says.
And again, you did in fact not provide it. When I say it, you did not provide the asset purchase and sale agreement with this documentation to Assessor Thibodeau in tax year 2021, the 4th year, correct?
I did not provide it, but I did say available upon your review.
Right, I had you read that. Okay, now let's
Available
move to exhibit
request.
3A. This is the current tax year. And this is something
Yes.
that's been eating at me since last week. On the very first page, under 2B. Can you read 2B for?
Due to the sensitive nature, non-disclosure agreement in effect between the seller and the buyer, a full asset purchase and sale agreement is not provided herewith. However, it was previously provided May 18th, 2022 as Exhibit 10 for the Louisiana Tax Commission hearing.
Okay, as we discussed last week, so this letter is dated May the 23rd, 2022, 5 days after the May 18th hearing. And you also testified that you were in attendance when Assessor Thibodeau testified, and I had your reader testimony, and she confirmed, she testified that she'd never received, and to that date had never seen the asset purchase and sale agreement. Nevertheless, you testified you assumed when you wrote the May 23rd letter that it had been provided to her.
I
Given,
I-
why
I
would you
did
assume
because-
that, given Assessor Thibodeau's testimony that she had never received it?
Assessor Thibodeau was at the hearing for the whole hearing. It was discussed in great detail. The rulings by this commission was based on the purchase and sale agreement for 2020 and 21. So I did assume that Assessor Thibodeau had a copy of that because we included it as our exhibits for the hearing
But again,
for the 2 tax years.
you heard her testify that she hadn't received it. Or, I mean, did you assume she was lying?
I guess I really didn't think about it that, because it was kind of obvious that it was discussed here and it was in our exhibits. And, but there again, I referenced that it was included. And, and 2 times in this letter, I asked, do you need any additional information? And I would assume that if she wanted to review the asset and purchase sale agreement with Cantium, she would have emailed, called, got in touch with us. We had open lines of communication. And also in this letter, my thought process, I guess, is the Exhibit F is the main document. That is the allocation of the purchase price and the preliminary settlement statement. So those 2 are the main documents that support the sales method.
Now, when you say Exhibit F, let's be real clear. There are 2 Exhibit Fs. There's Exhibit 12, Taxpayer Exhibit 12A and 12B, and what you submitted was in fact a document that you prepared. There's a lot of testimony about this.
Okay. Okay. Where's the exhibit? Go to exhibit.
If you look back to, and this is again Exhibit 3A, Bates 39 and 40. And 41, I'm sorry. This is a different document than Exhibit F to the asset purchase and sale agreement, is it not?
It includes the information from Exhibit F
I
from
didn't
the
ask you if it
purchase.
includes the information. I asked
the
you if it's a
ASAP.
different document.
Yes,
And again, you previously testified all this. You created this document by adding some columns and extracting some, excluding some other information, correct?
I wouldn't use the word create, because I use the, Exhibit F. You can see the title. It's from the the asset and purchase sale agreement. I use this to start with. So, and then I added to that, I added the allocation of the purchase price. So we could, we could point out in this hearing what the cost paid for the state leases was.
And that's exactly what's going. How did you do that allocation again?
It was pro rata based on the original, pre-adjusted, price, the 162 from the preliminary, settlement statement.
Okay, so this pro rata allocation that you did wasn't anything that was part of the active sale, was it?
No,
You didn't make any attempt to differentiate between the value of the individual wells. I mean, you keep talking about the Ryder-Scott report or the testimony earlier about the Ryder-Scott report. Did you attempt to reconcile the reserve value of these wells, or do you just do a simple pro rata allocation?
it was pro rata according to the settlement statement.
Okay. Now, I want you, same exhibit, turn back to page. I'm sorry, Bates number 44 through 48. Now, again, this is that's your 2022 information, the 5th year post-sale. and you do something a little different. In fact, I guess just go all the way back to Bates 48, the last page of this. You do
It's-
three different approaches to value. You do the replacement cost method, the income value method, and the market value, more commonly called the sales approach, correct?
This was the fourth return from the sale. Let's see.
Okay, let's count
Yep,
them.
okay.
18, 19, 20, and 21. That's 1, 2, 3, and 4.
Yep.
This
Four.
this is the fifth year post-sale, correct?
Correct. Four and a half years from the valuation. I guess I was thinking of the valuation date. The valuation date being January 1, 22. So it's 4.5 years from the Cantium Chevron acquisition
Okay.
closing date.
Let's start with what you call the market value approach. Again, that's same as what's commonly referred to as a sales approach.
Yes.
And it looks like you have a value for those wells that were purchased of 19,465,995.87, correct? Am I correct on that's what that number represents?
Well, the assets that were purchased, in the Chevron acquisition, had a value of 15 million. And since the acquisition, Cantium has added 5, wells since the acquisition. So, and that's a total of a little over $4 million. So the 15 million plus the additional assets that we've added equals the 19.4.
Well, here's where I get confused. Then you have an additional 10,282,000 that you say cumulative service additions since acquisition. That's what I'm trying to figure out, what this 29,748,927, again, under the sales approach represents.
Yes, glad you asked about that. That is the tangible additions for above the surface, for improvements that we've made since the acquisition that we report on Lat 5.
So how's that different than the 5 million you referenced? Or the 4 million you referenced being added to the allocated purchase price?
The 4 million that we added is for wells that we drilled specifically. It's for the subsurface, pipe in the ground, the casing, on the full,
Okay,
on the 5 wells that we drilled.
so you included the subsurface equipment in the 19 and the surface equipment in the roughly 10.3 million, correct?
Yes, so
Okay.
the 29 million includes 14 million of additions since the purchase price.
Okay, and then to be clear, if I understood your testimony a few moments ago, the 29,748,927.87 fair market value you come up with, again, under the sales approach, is purely the allocated purchase price, the pro rata allocated purchase price from 4.5 years later, plus the new equipment.
Yes, I believe
Oh.
we're saying that right. It's 15 million from the Chevron, the purchase price of the assets, and an additional 14 million since the acquisition to arrive at the 29 million.
Okay, let's go to your, you listed as the income value method. Were you referencing what is commonly referred to as the income approach?
Yes,
Okay, and this appears to be based solely upon the Ryder-Scott Reserve Report, correct?
yes.
And it looks like you come up with, based on the reserve report, an income approach valuation of 87,903,198. But you subtract 25 million from that. What does that 25 million represent?
25 million is the future costs that Cantium will have to pay to permanently abandon wells at the end of their life.
Okay, so it's in essence an assumed liability from when y'all purchase these wells, correct?
Future cost, yes.
Okay, now I have seen assumed liabilities like this, future costs like this considered in the sales approach. I've never seen them in the income approach. Can you tell me your basis for including that in an income approach valuation?
Yes, it's considered an expense in the future. And if you're familiar with the discounted cash flow method that's in effect for the 2023 year, it has a reduction for future expenditures. You reduce your value by your LOE and future capital additions is included, capital expenditures, I mean. And along those lines is also is the abandonment cost. So
Okay.
future cost is a reduction in the discounted cash flow method that will be in effect for 2023.
But this is tax year 2022, is it not? Ms. Harris, this case involves tax year 2022, does it not?
Correct.
And did you review the tax commission's rules and regulations for tax year 2022 and see what they provided regarding the discounted cash flow or the income approach for oil and gas wells?
Yes, it is the same, similar to the discounted cash flow method, where they allow future reductions, future expenses to be reduced.
In the 2022 regulations. Not 23, 22. I mean, the commission can take notes of their own rules and regulations. There was nothing regarding the income approach or the discounted cash flow in the 2022 regulations.
If I'm not mistaken, it does account for future expenditures,
It does. What does?
the rules and regulations.
For tax year 22 or 23?
22. 22 allows the income method to be utilized.
Or be clear, you're saying the rules and regulations allow that?
Was the one passed in 2020? Okay. I guess I'll defer to my attorney to answer that. It gets,
Okay. Ms. Sims, can you answer that?
We acknowledge that the rules in connection with the passage of the constitutional amendment for November 2020, the tax commission rules were not adopted until January, or I don't know the date they were adopted, but were put into place, implemented for the 2023 tax year.
Thank you. And just to be clear, so you'll acknowledge that there were nothing in the regulations for 22 that would provide that, correct? Relative to the income approach.
Well, relative to the discounted cash flow analysis that was adopted for 2023.
Okay, great. And Ms. Harris, all of your income approach, or as you call it, income value method calculations were based upon forward-looking projections, correct?
yes, it was based off the Ryder Scott report, which uses a forward strip.
And you didn't provide the full audited Ryder Scott report to Assessor Thibodeau. You've already testified. All you provided was a 2-page summary that was printed out by one of your employees, correct?
Correct.
And you didn't provide any audited financial statements, did you?
No, Cantium's audited financial statements, which are our financial statements, which are audited by Ernst and Young, includes the whole company. We do not have a separate audit on just state leases.
That wasn't
We
my
have an
question.
audit report for our whole company. So therefore, it would have been not useful for consideration by the assessor.
So is that a yes or a no? You did or didn't provide it to the assessor?
I don't have a state audited financials.
You do have an audited financial statement, do you not?
Yes,
Did you provide it to the assessor?
no,
Thank you. Did you provide any information that was not forward-looking, that was looking back to the assessor about the prior year's production, income, revenues, expenses, anything like that?
no,
The replacement cost method, the first column, come up with a value of, under that approach, of $120,386,319. Can you tell me how you calculated your replacement cost method value,
per chapter 9 tables.
which is the same thing that Assessor Thibodeau did, to the best of your understanding, correct?
Correct.
Thank you. No further questions.
Just a few follow-up, Mr. Acting Chair, Mr. Chairman. So I kind of work backwards here. So let's address the last few questions about information provided. So Ms. Harris, there has been some questions about audited financial statements or other income and expense information, questions asked to you today. Has there ever been, I know you've answered this before, but has there ever been a request from anyone in the assessor's office to provide any type of financial statements, audited or otherwise?
No, and in fact, I've never had any request for all these years from the assessor or from the deputy assessor for any additional information.
Now, back to the income method that was discussed. You are familiar with the constitutional amendment that was approved by the voters in November of 2020, allowing the income valuation method to be permitted to be used for valuation of oil and gas properties, correct?
Yes,
And we've acknowledged that the tax commission did not adopt specific rules in connection with that until for tax years 2023, correct?
correct.
However, the method was still available for use since it was adopted in 2020. It was still available for consideration by the assessor for the 2021 and 2022 tax years, correct?
Correct.
And is that why Cantium then provided the income information to the assessor's office?
Yes.
And I want to address one more thing about the submission of evidence and submission of information about the sale price. There were a lot of questions about the submission of the sale price and then some allocation. I want to turn your attention to exhibit 3C, 3i, and it's easier for you to look at page 182 of the Bates documents. I'll give the commission members just a moment to get here. 3C triple I, Bates, page number 182. All right, Ms. Harris, what is the date of this letter to the assessor's office?
September 22nd, 2020.
And what was attached to this letter? And you can read it in the letter here.
Attached is the preliminary settlement statement. Also attached is Exhibit F from the asset and purchase sale agreement.
Which was what?
which includes the purchase price allocation for the state leases. And the original, of course, the original purchase price of the Chevron Cantium acquisition.
And have these documents been provided to the assessor's office on several occasions since that time?
Yes,
So the assessor's office has had in its possession, provided directly by you, the settlement statement showing the purchase price and also the allocation of purchase price document since September of 2020, correct?
correct.
No further questions.
One follow-up. Ms. Sims just asked you a question about, is that why you provided the income information to Assessor Thibodeau? What income information did you provide?
Should have been the income valuation.
Okay, so you didn't provide any income information, did you? Simple yes or no will do.
Yes, the Ryder Scott Reserve Report on the first column at the top includes the revenues for the future.
Does Ryder Scott have a crystal ball? They know what your revenues are going to be in the future, or is this projections, speculation?
They use the forward strip according to the, I'll have to confirm if it's NYMEX or SEC.
Okay.
I'm not sure which one.
But did you provide any actual data regarding Cantium's actual income?
Not other than the income calculated on the reserve report.
Again, the forward-looking income report, correct?
Correct.
Thank you. No further questions.
Well, go ahead, Regina.
On exhibit 1, I just want to clarify, there are two form 3102s. Okay.
Correct. You'll see that there's a, on Bates label page 2, Bates label page 3. When, when the tax commission's electronic filing system is having some difficulties, then we file, by hand. And then, as my understanding, the staff then inputs the information, and that's page 2. And so there's some discrepancies, like the date is wrong. And that's why you have the 2, because we had to hand file because of some issues with the electronic filing appeal system, which again, we're having this year as well.
Page 3 would be the correct one.
Page 3 is the correct. That is correct.
And then, so the Ryder Scott database, we've talked about a fully audited report. Is this a printed report that y'all received? It's some kind of bound report, like financials, like audited financials, or is it totally in the database and audited there?
We receive a bound copy of our full reserve report from Ryder Scott. And so in the past, we had no reason to do a separate state reserve report. But since the 21 hearing, we have requested for the tax year 23 to have a separate bound document to be able to present to you.
And then my last question is on your method of pro rata so I'm trying to wrap my head around how you did that between the state and federal leases with your allocation. And was it, and I'm gonna use simple numbers. So $100, 10 wells, every well would be 10, or was there some other value for each well that was allocated if one was worth more than the other, with more reserves, less reserves?
No, I use the amount from the preliminary settlement statement, it tied to that. And I use that column that was already existed as the ratio to allocate the closing.
I'm not sure if you'll be the right person to answer this question, but what was the reason for the delay in the actual closing? The actual,
That-
but
that
the
would-
difference between the,
Yeah, let me add, just a moment. Let's see who's best to answer that question.
yeah, but you,
Between January 1 and July 1st, is that?
yeah, the
question?
question, the question I'm leading to is, I mean, there's a huge revenue adjustment
Right.
between January first and the closing date. I'm gonna call it the closing date.
Sure, right.
What caused the delay?
Yeah, with any oil and gas acquisition or transaction, you have to set an effective date because the negotiations were going on before, after the January 1st date, but before the July 1st date was when all the final negotiations were. You have to set a point in time from which to adjust off of, in this case, sometimes it's, you subtract, sometimes you add. In this case, there was more revenue than there was expenses. Sometimes it's the reverse. And just in the oil and gas business, you set the effective date, which is the January 1, and bring it to the closing date. And whatever that adjustment is, either the buyer or the seller gets the delta. So it's not a delay so much as you have a moving target where during that time you're negotiating, you have revenue and cost that you need to adjust for to get to that July 1st date.
I follow you. It just seems like the purchase price was going down rather quickly.
Correct. Although again, if there had been a lot of expenditures on a platform, on a well, I mean, you can have the opposite as well. Chevron in this case, if you think about it, didn't spend any money during those 6 months. Cantium, on the other hand, from July 1st for the next 18 months, spent well north of $150 million getting the platforms back in more operating it's just repairs and maintenance that Chevron hadn't done. So we ultimately did have to pay for their neglect, but during those 6 months, they did very little.
Okay, thank you.
Okay, thank you.
Is that your last bit?
We're not gonna be long.
Okay, Mr. Eddington?
Good morning, Commissioners. Brian Eddington, Counsel for Lafourche Parish Assessor's Office. Is my first witness. I would like to recall Assessor Wendy Thibodeau. Ms. Thibodeau, again, for the record, can you state your name and position?
Wendy Thibodeau, Lafourche Parish Assessor.
Ms. Thibodeau, you've been in the hearing today. You've heard all the testimony, the discussions that as of the January 1, 2022, we commonly call it a lien date, but the record date for tax year 2022, the sale is now 4.5 years old,
Yes.
correct?
Correct.
And I know last year, when we had the hearing on the 2021 appeal, when the sale would have been 3.5 years old, Assessor Shahardy had raised some questions and indeed expressed concerns about the age of the sale and whether the sale was stale. Do you recall that?
Yes.
And you'd also expressed some concerns about the age of the sale. Can you relay those concerns to me?
Because in the rules and regs, it specifically says that property must be reassessed at least once every 4 years. I do that for residential. If somebody came into my office and handed me a sale from 2020 and sales in 2020 were higher and sales are lower now because of all kind of things, interest rate, so forth. We went through COVID, all kind of stuff. If somebody came in with a sale for 2020, I wouldn't put their 2024 value on at what houses were selling on just for 2020. This sale is from 2017. I don't do this to residential. I don't do it to watercraft. I don't do it to any other thing. It's old in my opinion. This sale is old and antiquated. Oil is not the same price. In 2017, oil was 40 something dollars a barrel. Oil is 70 something dollars a barrel. Things have changed.
22.
I'm sorry, 2022. It's 70 something dollars a barrel. My point is that to be uniform and consistent, I follow the tables. The tables allot for everything that they were talking about with the income approach, projections, so forth. In 2022, we have made changes in 2020 with the law, 2023. When they asked me what I needed in order to assess them in 2023, I sent them the Excel spreadsheet to figure it out, which included income and so forth. This is way overcomplicated. All I'm saying is that the sale is old. It's an old sale.
Well, Assessor, Thibodeau, I'm gonna ask you, Rick, because you referenced the rules and regulations, and with all due respect, I
Oh,
think
I'm
you
sorry,
actually
it was the
referenced the authority.
Constitution.
Article 7, Section 18 F of the Louisiana Constitution. Can you read that?
You're gonna make me cry.
I'm sorry.
Reappraisal, all property subject to taxation shall be reappraised and valued in accordance with this section at intervals of not more than 4 years.
And again, the sale at issue was 4.5 years old on January 1, 2022, correct?
Correct.
And you were here when Mr. Beer testified, and I asked him if he could take the formula for the sale in the spreadsheet and tell me what the value would be on, or what the adjusted sales price would have been with the closing of January 1, 2022. And he said he could not.
Exactly.
And now, Mr. Thibodeau, you've never actually seen the sale to this day, have you?
No,
So I'm assuming you certainly could not come up with a reappraisal value as of 1/1/2022 based upon the sales approach. Could
no.
you?
But even if I would see the sale, we don't do reappraisal just on 1 year. We don't reappraise property according to 1 year. That's 4.5 years old.
That would be sales chasing, would it not?
That is very much so sales chasing.
Okay, for 2022, for the first time ever, Ms. Harris also brought up an income value method. Now, what she gave you, the support for this was the 2-page, well, what they described as the Ryder Scott summary, which is a series of estimates and forward-looking projections.
Correct.
You know how to do an income approach
Yes, I do.
valuation, do you not?
I do.
And do you base an income approach valuation based upon speculation or projections?
Never.
What's the one document you need to do an income approach valuation?
Financial statements.
And you typically prefer audited, I assume.
Yes, that's it. That's the only kind I accept.
And did you receive any audited financial statements?
No,
So Cantium didn't provide the documentation you would need to do an income approach valuation.
correct.
Correct? Okay, now, Louisiana law provides 3 approaches to value. Now, we've been through the market approach, we've been through the income approach. Can you tell me what the third approach is?
Cost approach.
And that in fact is the method your office used. is it
Correct.
Not?
Correct.
And you did the cost approach based upon Chapter 9 of the Tax Commission's Rules and Regulations, correct?
Correct.
So again, the reason you didn't do the income approach was because you didn't have the information. And
That,
there's been some speculation. Did the 2022 rules and regulations promulgated by the tax commission empower you to do an income approach valuation on oil and gas?
no,
And you said on the market approach, sales approach, one, you had to receive the documents and you had a stale sale. So
that's why the
Even-
weight was buried on if it was, it would be on the tables because the tables were the most accurate evaluation process.
thank you. Assessor
Approach.
Thibodeau, is there anything else you would like to add?
No, I just need a number on how long these sales are supposed, just on how long these sales, we're supposed to use them for. And I actually called Chief Justice Weimer and asked him because the Supreme Court made a ruling on that sale. I did.
Thank you. Answer any question that the commissioners or Mr. Palazzolo may have for you.
Mr. Palmer, go ahead.
Yes, I do have some questions, Mr. Berger. Assessor, this is our third hearing, all for the Cantium assets, and you have not seen the sale all these years, even though it
No.
was in the exhibit book that was provided to your attorney.
Send it to me.
There were lots of discussion about the sale just now with Mr. Eddington, but as you said earlier today, and the first time you were up at the table, you used the tables to arrive at this assessment,
Correct. That's the cost approach.
the cost approach. And in fact, you would not have used the sale if it was 1, 2, 3, or 4 years old.
Just going by the date, I thought it was old. The first 2 years with it, with the Supreme Court ruling, I didn't feel that the sale was, I didn't see the sale, but I went on what information I had in the office. And if there is always a rule that you use the best information available. The best information available in my office at those 2 years was the tables, and that's why I used that. They disagreed with me. I adjusted those values. In 2022, the sale is 4.5 years old. And I
So-
can't answer whether I would or not because I didn't have the sale, but I feel like the cost approach was the best.
You've never used the sale for any year.
Mm-mm. They have.
And if the law provided, the tax commission has forced you to use the sale, is that correct?
They ruled against me on
Correct.
it.
Okay. So if the law provided that 4 or even 5 years is permissible to use, you would still not use it here?
I can't say that.
Speculation.
I mean,
You can't say, okay.
I have no idea.
Do you
I don't
agree
know
that the
where we're going at
Constitution of the state of Louisiana is the supreme law of the state of Louisiana?
I'm sorry?
Do you agree that the Constitution of the state of Louisiana is the supreme law of the state?
Yes.
Do you also agree that the taxpayer here had no guidance from anyone to submit information for the income approach that the people said that they could use?
If I'm asking for a deduction, obsolescence or depreciation, if you ask me for a sample of my blood, I'd give it to you if that benefits me in a deduction. My point is if you all understand your business better than I do. So my assumption, as y'all like to say, is that you would give me any and all documentation that you believe would help your case and your cause on given obsolescence. Not let me, as the assessor in Lafourche Parish with 55,000 assessments, guess at what you have to give to me. Give me all your documentation. I'll go through it with a fine-tooth comb and figure out what I need and what I don't need. This is not different. People come into my office, they give me all kind of crazy stuff. And I go through it and I see what I can use, what helps them, what doesn't. And that's what I go by.
So Cantium provided information in its rendition and you used the cost approach, correct?
No,
You did not use the cost
I
approach.
used the cost of, you asked me kind of two questions.
They
Cantium
provided
provided
information
me
to
with
you.
one. That's one answer.
Let
No.
me ask the question.
All right.
Cantium provided information to you in May 23rd in 2020, 22, 21, but you used the tables, even though they provided certain information to you.
They provide the lat form rendition.
3A, Exhibit
Okay.
3A, that's what I'm
Let's get
referring to.
straight.
Okay. You said earlier in your direct testimony with Mr. Evington, Miss Thibodeau, this is my question. You said earlier that financial statements is what you would need to evaluate the income approach. Cantium asked you, correct? Is that correct?
Financial statements,
statements
if
is
you're
what-
asking for the.
Well, yeah, slow
H2
down, ask one question at a time, let her answer.
You said earlier that financial statements is what you would need to evaluate the income approach. Is that correct?
In order to evaluate
that correct?
any income approach, you need financial statements because in the financial statements, they have expenses, they have net operating income, gross, they have all kind of stuff in your financial statement. In
So
order to do any income approach,
why
you
didn't
need
you ask them
financial.
for that?
Because you all were asking me for the sales approach. Y'all wanted me to use the sales approach, not the income approach.
Look on the second page of that letter. What does it say at the top?
This Ryder Scott projection,
Correct.
that's a projection. That's not anything having to do with income, like, with the financial statements.
But
That's
this
a
is my
projection.
question. That is what the taxpayer provided to you to support their income approach in a situation where there were no regulations in place for it. Okay? You're saying that what you would have liked to have had was something different.
What you
They
provided
asked,
me.
hold on,
I didn't-
they asked you what you needed. Why didn't you ask them for it?
Because you were asking for this, for me to use the sales. Y'all wanted me to use the 2021 rendition that the tax commission gave me as the assessed value. That's what y'all asked for every time. So did you want the income or did you want the sales? Cause this is
I
on
believe-
on your document on 3102 and 3103A. The assessed value is in accordance to the sale price, what the tax commission agreed in 2021 plus the 4 million in wells or whatever. Or 10 million. I still don't know what they were asking for. That's what you filed with me and with the tax commission. Is that not the sales number?
Just for clarification, you're referencing taxpayer exhibit 1?
Yes, I'm sorry, it's the appeal form. They wanted 29,748,000. That is the sale price. Well, they even got an allocation. of sales price.
Turn to page number 3.
3,
Mhm. Page 3.
okay.
Can you read the text that's next to the 2 asterisks in the lower left corner of that page?
The values presented above reflect the sales market of 29 and the income approach of 62 as permitted to be considered under statutory and constitutional provisions.
So would that indicate to you that Cantium was providing information to you of both approaches?
So you were feeling for what? They are millions of dollars apart. Which one did you want?
Does this indicate to you that they were providing you 2 approaches to value?
I'm gonna be honest with you. I've been doing this for 26 years. I've never seen anybody do that.
It might have been good to ask a question then, right?
It would have been good for you to sit there and say that y'all wanted income. I've never had a conversation about anybody with income.
Okay, thank you.
Does that conclude the testimony?
That concludes our testimony.
Thank you, Mr. Bercher.
We can go. I got some to go.
I think that concludes the appeals.
Mr. Bercher, can we have an opportunity to
Um,
present a short post-hearing memo after we
yeah,
get the transcript?
Drew, you want to come up and help me out with this?
Let's call for a second. Ballpark figure on the, having the transcript available.
Two weeks.
No. I was just asking. I was not trying to rush. Okay.
All right. So the commission will request post-hearing briefs. We'll say 4 weeks from today. If the parties need additional time, if the transcript's delayed, contact me. 10 pages, double space, 12-point font. Chairman's normal request is clearly articulate the value that you're requesting for the taxpayer. I think we know the assessor's value, and provide the mathematical explanation if appropriate. Anything else?
I think that's,
When's Thanksgiving this year? Okay. That's the only thing that worries me. Be in Austin, Texas.
Yeah, so we'll say November 15th, end of day, November 15th. Just reach out to me.
We'll reach out to you. Wait, that'd be.
Yep. Okay.
November 15th, 10 pages,
Yeah, 10 pages,
8-point type, single space.
12-point font, Times New Roman, double space.
Thank you, commissioners.
Thank y'all for your patience.
Oh, wait.
And someone like to make a motion that we take this under advisement? I have a motion to take this matter under advisement. Is there any objection to the motion? Hearing no objection, the motion is approved. I think that concludes the docket for today. I'd like to read into the record. The tax commission hereby accepts all pre-filed documents and oral testimony into the record as taxpayer exhibit 1 in Globo, exhibit 1 in Globo, and the LTC. No, there's no appraisal, so I don't have to have that. Thank you. Have a motion to adjourn. Hearing no objection,